In a world where health and wellness are rapidly reshaping global consumer habits, one company is quietly leading the charge: Glanbia PLC. Known for its deep roots in dairy and its growing global presence in nutritional solutions, Glanbia isn't just surviving in today's volatile market, it's evolving. With a smart blend of innovation, strategic acquisitions, and a focus on long-term value, Glanbia has begun to turn heads on the stock market once again. Following its latest earnings release, the company has given investors something to cheer about, and its stock reflects that momentum. But what's driving this growth, and can it last? Let's take a closer look at Glanbia's latest performance and what it signals for the road ahead. Glanbia PLC, a nutritional powerhouse charging ahead in a shifting market. In the dynamic world of global nutrition and wellness, Glanbia PLC has proven once again that it's not just surviving economic headwinds, it's adapting, evolving, and winning investor confidence. With roots in Ireland but reach across the globe, Glanbia is strategically reshaping its identity as a forward-thinking player in the health, wellness, and performance nutrition markets. After the release of its first quarter 2025 earnings, the company's stock surged by 9.68%, signaling growing investor optimism. So, what's behind this recent upward momentum in Glanbia's stock, and more importantly, is it sustainable? Let's dive into the company's recent performance and growth trajectory to understand what makes Glanbia's story so appealing right now. Strong overall revenue growth. Glanbia reported a 7.2% increase in group revenue, with 2.7% of that growth driven by recent acquisitions. While modest, this growth is meaningful in today's cautious market environment. The increase shows that Glanbia's strategic efforts, particularly in strengthening its core nutrition and ingredients business, are working, and its acquisitions are adding value rather than being a drain on resources. Health and nutrition shines bright. One of the brightest spots in Glanbia's Q1 update was the health and nutrition segment, which saw revenue jump by an impressive 24.9%. This segment benefited significantly from the acquisition of Flavor Producers, a strategic move that not only expanded Glanbia's product capabilities but also positioned it to ride the growing consumer demand for clean label and naturally flavored nutrition products. In addition to acquisition benefits, this segment also saw strong volume growth, a good indicator of rising demand from consumers who are becoming increasingly health conscious. Dairy nutrition pulling its weight. The dairy nutrition division also delivered solid results, with revenue increasing 18.9%. This was primarily due to strong demand for Glanbia's protein-rich solutions and favorable market pricing for dairy ingredients. Protein continues to be one of the most talked about and in-demand categories in both sports and everyday nutrition, and Glanbia is right at the heart of it. This kind of performance in traditional yet evolving segments shows Glanbia's ability to balance innovation with operational strength. Performance nutrition faces challenges, but shows resilience. While the company did report a 6.6% decline in revenue for its performance nutrition segment, the dip is more nuanced than alarming. The revenue decline was tied mostly to weaker sales in U.S. clubs and specialty channels. However, this was largely offset by stronger performance in online retail, mass-market drugstores, and international markets. Glanbia's ability to quickly pivot and diversify its distribution channels is a key reason why investors are staying confident. This adaptability matters, especially as consumer buying behavior continues to shift toward e-commerce and international markets. Investor-friendly moves, buybacks, and steady guidance. Another major reason Glanbia's stock gained momentum is its ongoing €50 million share buyback program, with €42.7 million already completed. Share buybacks typically indicate confidence from management in the company's long-term value, and they provide shareholders with increased ownership value. Additionally, Glanbia reaffirmed its full-year earnings guidance, maintaining its adjusted EPS range of 124 to 130 cents, reflecting a year-over-year decrease but still signaling stability. In today's uncertain economic climate, consistency and visibility matter greatly to investors. CEO's optimistic tone amid market headwinds. Glanbia CEO, Hugh Maguire, acknowledged the macroeconomic volatility and the specific challenges facing the performance nutrition division. However, he emphasized the company's resilience, its proactive cost management, and the early success of its transformation initiatives. These transformation efforts are aimed at streamlining operations, boosting efficiency, and enabling long-term growth, critical ingredients for sustained stock performance. Bottom line, a balanced, strategic growth story. Glanbia PLC may not be making headlines every day, but this nutrition giant is steadily building a compelling investment case. With strong performances in health and nutrition and dairy nutrition, strategic acquisitions, shareholder-friendly actions, and a confident leadership tone, the company's latest quarterly report offers much to be optimistic about. For investors seeking exposure to the wellness and nutrition space without the wild volatility of early-stage startups, Glanbia presents a balanced, disciplined growth opportunity. While there are still challenges to navigate, the company's ability to adapt and deliver amid uncertainty is what makes its stock worth watching closely in 2025 and beyond.